folks, Dan Frio here, the Mortgage Update. Sorry I'm squished down. I'm actually just sitting at my countertop outside, enjoying the sunset and the lovely weather. It's kind of getting a little bit chilly though. And I'll be unfortunately flying back tomorrow to be back in the grind and be back in the driver's seat. So what happened today? Well, the stock market was up 143 points. The S&P was up 23. The mortgage-backed securities kind of dipped some. So let's get into why this happened and why, I follow some of the numbers that I follow. So, like I said, I always, say pigs get fat, hogs get slaughtered. So what we saw today is a little bit of comeback in the markets. It's nothing. If you follow the technicals that I follow, look at the. Oh shoot, I shouldn't have put that there. Look at the bottoms right here, or look at the count. So if you're looking at the numbers or the technicals of this, we're still right in range. I wasn't thinking we're going to top over here. That's why I pretty much thought we were going to be stagnant. So we're right in line to where I thought we were going to be. The news that came out today, manufacturing numbers came out, and they were positive. And that's really good. In the next couple of days, we're going to start seeing the jobs report and wage growth. So let me break down what we're following here. Okay, so what happens is in the economy is, and I say this on a lot of other videos, but if you're new to this, we watch the stock market and the bond market. Okay, what mortgage rates are determined by is what we call the mortgage-backed securities market. It's a bond. All right. So let me give you the difference between the two things. Bonds are over on this side. They're more a lower yield, but they're constant yields. And you kind of know, what you're getting at, that rate of return. Stock market, unless you're well diversified, you can buy one stock and it can plummet and so forth. So let's just get on to two things. There's two investments you can make, stocks or bonds. Let's just look at it that way. So as the economy is going really good and all the numbers, manufacturing numbers are going well, employment numbers are going well, inflation's in check, everything is ticking like a fine-tuned clock, people are throwing all their money into the stock market. Well, recently there's been a lot of euphoria in the market, and I've been calling that out. And last week, I knew that we were having a correction coming, and we had that one day of a 600-point decline, and I think that was a minor, correction for us. I think there's a little more to come, but some of the numbers coming out right now are pretty good, or I'll say really good. So what we follow here, and this is basically the determinant of how I can somewhat predict what's going on with mortgage rates. So again, we have those two technicals. We have stocks and bonds. As everything's clicking very well, people throw all their money into the stock market. So let's say you have $2. You have the market's going, everything is going well. Manufacturing's going well. Employment's going well. Inflation numbers are down. There's no uncertainty around the world. Everybody's going to throw all $2 into the stock market. Well, you throw some uncertainty into things. And in the last week or two, it's been the coronavirus. I think it's basically, that's just a little blurb. How this is going to impact companies long term, it really isn't. It's a short term little bubble. So we're going to take advantage of that by watching these rates go down, 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 down. And when there's a little reversal, because nothing always goes in a single pattern continuously, we're going to lock in all of our clients. All right. So then some numbers that came in today were good, fortunately for stocks, but not good for bonds. So again, in this realm, if everything's going great, you put it in the stock market. Well, if you're not putting any money into the bond market, such as mortgage-backed securities, it's going to drive down the prices, and it's going to drive up the rates, the yields, mortgage rates. So this number here is basically what's happening with the mortgage-backed securities market. It was down 9 ticks. That's not a lot. That isn't even really enough to change interest rates. Okay, but what affected that today was the manufacturing numbers came in stronger than expected. All right, so that's good for stocks, good for the economy, but not good for mortgage rates. Okay, so the next thing is what's coming out is employment numbers. Those are coming out Wednesday and Friday. And also what's coming out this week is average hourly work weeks and earnings, or hours worked during the week and earnings. Okay, so what we follow there is the employment numbers as they go up and up and up. Hopefully, I don't think they're going to, but if they make a little turn and start to go up again, that's giving more momentum to get out of bonds and into stocks, thus driving down the prices of bonds and the rates up. Okay, so I don't think the employment numbers are really going to show any differences there to really pull monies out of the bond market and have rates go up. Hourly hours worked and hourly pays, I don't really think that's going to change dramatically either. So the technicals that we watch is manufacturing, which had a nice little uptick here. The employment numbers are coming out in the next few days. That'll be, figure out where that's going to be. I don't know, but I don't think we're going to be surprised in any numbers. I don't see where we're going to have a lot of wage growth. If you have a lot of wage growth, then it starts spurring in inflation. That spooks the Federal Reserve, and then they start tightening or raising rates. So those are all great for the economy, but bad for mortgage rates. I don't see much of that happening. The China trade deal, it's phase one is through. However, China's already starting to come back saying, oh, you know what, this coronavirus thing, it's hindering us from being able to hold up our end of the bargain in purchasing I think it was $200 billion worth of goods and services from the U.S. Watch that, because Trump's going to react, and I don't know how he's going to react. I don't think he's going to react good to that. So that's an uncertainty coming. What else can we talk about? Let's get to the headline numbers. So right now we have mortgage rates dipping. They're digging deep. I think this was posted earlier in the day, but we had somewhat of a reversal in the middle of the day, down 9. You can see we ended it at the worst case scenario there. But basically, we're in range of where I'm thinking. I don't think mortgage rates are really going to do anything crazy, so I'm not locking people right now. If you're closing within the next week or two, I'll lock. But the trend still here is. Let's look at these numbers, or let's look at the trend lines. It basically just brought us back into trend lines. Here, and I'll go to right about. That's probably about right there. So we're right here. We could probably close, if we close right in here, we're dead on, and that's a flat market. I don't mind flat. I love rates where they are now. What I don't like is the uncertainties, and I don't like these days, where you have the crashes, one way or another. Let's see the headlines on the stock market. Dow's up 144. Hold on, I just refreshed. I apologize about that. Because the whole world is fighting. I don't know why the market would be up 144 today because of the coronavirus, because last week it dropped 600. Stocks end higher on Wall Street, positive data. Treasury yields. Okay, that's that. So really nothing. Manufacturing numbers was the shocker for me today. I didn't think they would be as robust as they were. But again, it helped the stock market. It brought us back into range in the bond markets. So I don't see anything there. Let's look at the economic calendar. What's coming up at the rest of the week? And I posted that earlier this morning in my update there. Let's see what the calendar has for the week. Manufacturing numbers came back okay. Factory orders. This is going to. I hope it's on. I'll be selfish. On the mortgage side of things, I hope this isn't a robust number. I hope it's just in line with consensus. Then you start having payroll numbers on Wednesday. You start having other employment numbers Thursday and Friday. So these numbers here are going to play, what's going on with inflation. This is the manufacturing numbers. So let me just tell you who I am for those new to the channel. My name is Dan Frio. I'm a mortgage advisor in the Chicagoland area. Have been for 32 years. I'm all over the radio in Chicago on, you can hear me every weekday on WYLL radio from 7:30 to 8 p.m., the Mortgage Update with Dan Frio. Then you can also find me on Saturdays on WIND Chicago, Saturday mornings from 7 to 8 a.m. I post a YouTube video. I try my best to do it every day, just to show what's going on in the markets. What's the week looking like? What's some of the technical figures that we're watching to see, where rates are heading. My prediction right now, they're going to be flat for the next few days unless something really out of the ordinary comes in, which I don't think. But what I think is going to play a key role here and again, I'll say it right now, is the China trade. They're trying to kind of come back and say they can't do the 200 billion a year in goods and services from us because of the coronavirus. And I don't think Trump's going to react very well to that. And I think that's going to spook the markets, stock market, and help the bond markets. So I see us being flat or rates getting a little bit better on that front. So if you'd like to, I deal with about 2/3 of the country. So if you'd like to reach out to me, let me know if I can get you pre-approved for a mortgage, maybe help walk you through, does a refinance make sense? Runs through some numbers with you. I get a lot of quotes every day saying, Dan, I got a quote from X place over here. What can you do for us? And I love that. So thank you for, so many, most of the times I beat it, but sometimes I can't. So God bless you guys for at least giving me a shot at it. I always say, give me an at bat and let me see if I can hit the ball out of the ballpark. But if you'd like to reach me, you can reach me at 844-775-LOAN, and loan is 5626. Or shoot me an email at dfrio, and you spell Frio, F-R-I-O. So dfrio@parksidelending.com. You can find me on the web at thefrioteam.com, or just Google the mortgage update with Dan Frio. You'll see about 3 or 4 pages about me in LinkedIn, Facebook, YouTube's, Google reviews, Zillow reviews, everything you can find out about me. Please do. And so that's it for now. Please reach out to me. If you like the video, I hope you do. Give me a thumbs up. Don't forget to subscribe down below. And, there's some links down below in the description. And I get a lot of questions. I have one video that kind of went viral. It's how to get an 800 credit score. So down below you can click. There's a free credit bureau or credit scoring system. Just copy that URL, put it in. There's no cost. Once you subscribe to that system, you're going to get prompted to upgrade and things. Don't do that. Don't spend any of your money. Just it'll give you alerts. It'll give you a credit score. It's a great tutorial system for that. And there's a website that I created actually. It's called creditscoresandmore.com. So go to creditscoresandmore.com, because most of the time, if a lot of people are really into their credit scores now. If I can't help you, most of the time I can't help you, it's because of your credit. So if you go to creditscoresandmore.com, there's 4 steps. I'd highly advise you to do step 1. It's 100% free, so there's no cost to you. It monitors your credit, gives you credit scoring systems, gives you the best credit cards available to you. It's great tutorials and teaching. Step 2 is you can actually get the real credit bureau that we use when we're pre-qualifying you, and it's a soft hit if you pull it. Okay? Step 3, and I'll just go through step 1, 2, and 3. Step 1 is a great free system that you get your credit scores, a credit score. It's a tutorial system. Step 2 is your true credit report, the true credit report that we use. But by you pulling it, it's a soft hit. If you need help with your credit, click step 3. It is a paid service, but I use it personally, and I'm actually a certified advisor on that system. We'll help you get to where you're looking to be, or hopefully you're looking to be. There is a service charge every month, but it's probably half the price that you would pay anywhere else. And I'd be more than happy to walk you through that as well. We can probably get you, it's not one of those things you log in there and you keep it forever. The goal is to get you in the system and out of the system within 90 and 120 days. So that's our goal. And if you use that system, I'll give you a discount on your credit. I'll actually pay your appraisal fee up to $500 if you use me for a mortgage. So that's it for now. God bless. I will be posting probably tomorrow morning or afternoon. I fly out late afternoon, and I'll be back to the office on Wednesday. So God bless. Have a great night. See you tomorrow. Bye-bye.